Volatility is back, sending shockwaves down Wall Street. Both the Dow and the S&P 500 now officially in correction territory for the first time in 2 years. Joining us this morning to talk more about investing is Craig Hodges. He is Hodges Funds portfolio manager. Craig, it's good to see you. Thanks so much for joining us.
Thank you. Great to be on.
Your AUM assets right now are what, Craig?
About $1.5 billion.
$1.5 billion. What do you want to do on a day that had the market trade down more than 1,000 points with $1.5 billion? You've got to figure out how to allocate that capital. Where do you stand?
Sure. We actually get excited about these type of environments. You know, we've been clamoring for a long time. The whole market's been clamoring for an opportunity, a sell-off. And now that we're getting it, everyone's getting a little scared. And I think that we may see a little more of this. But, you know, look for great companies that go on sale. And there are a lot of them out there, you know, maybe a little bit under the radar. Things like International Paper, or a lot of the airlines have really been, you know, some of these great companies have been knocked back 15, 20% just in the last week or so. So that's what we're doing. We're at Hodges Capital. We're, you know, finding the things we may have missed out on and getting a second chance in a lot of names.
So you're ready to buy on the dip then? Because a lot of people say, look, when you have a sell-off to this extent, you really want to see a washout. You want to make sure that, you know, the shark is out of the water before you go back in. So at this point, you feel like you saw that washout, or is there more to come before you start buying on the dip?
No. I believe there's more to come. There hasn't been enough pain inflicted. You know, I remember some other major sell-offs we've had. We've had, you know, I would say maybe 15, 20 customers calling in for the hand-holding exercise. I think this week we've had maybe 2 or 3 that really needed, you know, kind of talk off the ledge type thing. So I don't think the pain has been enough. And, you know, the market isn't perfect. It isn't going to go exactly down 10%. It'll test us some more. But the point is, you can really get some great companies that have gone on sale. So, you know, look at earnings. The backdrop is just tremendous with this tax cut. I know there's issues with higher rates and a lot of things to worry about. But when you're talking about what the economy is going to do because of these tax cuts, because of this pro-business environment that we're getting in, look at this as an opportunity and just find the great companies that are going on sale.
Craig, everyone's talking about Treasuries hitting 3%. You know, that's kind of the big marker here now. What are you thinking about that? I mean, are you concerned when we see that number, if and when we see that number, we will, what that's going to do to the market, or are you not concerned about that?
Not that concerned about it. Basically, we look at it as an opportunity. I mean, if rates get to the point where they really are a competition for equities, then but we're talking about another point there. So, you know, the market's going to adjust. It's going to be, you know, there's a little bit of a shock factor that you see when you get higher rates. The market will, you know, kind of settle down and use it as an opportunity.
Craig, James Freeman here at the Journal. I'm wondering, as you look at the recent events in Washington, you mentioned all the good policy in terms of tax reform. I think deregulation has businesses very excited. But we're also seeing no repeal of Obamacare in terms of the spending part of it. And now this new budget blowout. Are you concerned about the spending, the amount of the economy that the government is consuming?
You know, not overly. You know, the market has not been concerned about it. We've had, you know, these record-setting highs, and it's never been a problem yet. You know, eventually those things need to be worked out, and I believe they will. But, you know, what the market is focusing on now are really earnings, free cash flow, things like that. And this may be one of the greatest earnings periods that we've just reported. I think I saw where 80% of the companies out there either beat or met earnings expectations. That's fantastic.
Yeah, you're right. So it was 80%.
Yeah, so this is a good environment, and so take advantage of it.
One thing that was surprising yesterday is Boeing was the biggest contributor to the loss in the Dow. The Boeing, now granted, it was the top performing stock for the Dow year to date, one of only 4 Dow stocks that's still positive for the year, but it shaved 127 points off the Dow on a day that Congress was moving to increase defense spending by $165 billion. I thought that was, I mean, it's kind of evidence that the market can ignore good news for a stock. Now, granted, Boeing he's not going to get all of that money, but nevertheless, you have lawmakers moving to increase defense spending, and you have one of the biggest defense contractors taking a big dive.
Yeah, but let's not forget, one of the reasons that stock has done so well is because of the commercial airline activity, right? So the commercial airlines are being sold and businesses picked up there. That's a function of the stronger economy. So again, you have that backdrop that is quite strong, and you just can't ignore it, even though you're seeing these sell-offs worried about higher interest rates.